Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Stocks in Focus and I'm Hiral Dadia. One of the companies that is in the news and will be one of the beneficiaries of the festive season as well as the World Cup, which is ongoing. We have Sapphire Foods. If you see in terms of the revenues, a growth of 14% coming in there. Margins have seen a slight dip. However, the profits are down 43%. Now, clearly the SSG print for the industry as a whole has been slightly weak. Let's understand from the management what has worked, what has not worked, and what's the trajectory looking like going ahead. Joining us on the show is Sanjay Purohit, whole-time director and group CEO at Sapphire Foods. Sanjay, good morning and welcome to the show, and a pleasure to speak to you as always.
Good morning, Hiral, and thank you for inviting me on the show. And good morning to all your viewers also.
Thank you, and thanks for joining in as well. Firstly, the EBITDA growth, despite the demand headwinds due to additional month of vegetarian days, that's one of the reasons I pick up where we've seen a dip in terms of margins, but EBITDA has grown. How has the quarter been according to you? Has it met your internal expectations? What are the hits and misses?
So consumer demand headwinds continue, Hiral, and we've seen this post-Diwali last year. So now it's nearly 3-4 quarters where you can see private consumption slowing down undoubtedly. Within our three businesses, we've had a mix of performance. If I look at the Sri Lanka business starting to now come back as the economy starts to stabilize. Pizza Hut, we have had a challenge, and I'll talk about that in a minute or so. But really, the stellar performance has come in from KFC. Despite flat SSSG or same-store sales growth, we've grown revenue by 19%, and our restaurant EBITDA margins has come at 19.2%. And if you look at the first half, 20% restaurant EBITDA margins have been the highest that we have ever delivered. So if you put all of this together on a consolidated basis, we grew revenue by 14, EBITDA by 13. In the context of this demand headwinds, I still say a solid performance overall.
Right. So okay. Now with this, with Pizza Hut as well, that's where I think the weakness in same-store sales growth has come in. I think it's a downtick of 20%. And you mentioned about KFC, which has remained flat, and that's which has actually driven the EBITDA down by around a miss of around 7% basis what the street was estimating. From a near-term perspective, Sanjay, you have sporting events already which have come in the third quarter. You have festivities that have come in the third quarter as well. Do you think that the base now will be good for the second half of the year as compared to the first half?
Yeah, so the World Cup undoubtedly is a big event this year. But last year also we had a T20 World Cup and we had the Football World Cup. So actually, Hiral, if you see from a occasion perspective, it is now sort of normalized right through the year. There isn't a specific event that comes up and helps bump up sales or so. So I think from a overall basis, this is what we see. The second half of the year, the bases are a little lower than what was in the first half. So undoubtedly that will help. But again, like I say, KFC strong performance. And if you'd like, I'll just articulate a bit on the Pizza Hut challenges. So if you look at what has happened on Pizza Hut, one is from a QSR perspective, undoubtedly the industry has faced those headwinds, and you can see same-store sales growth starting to be challenged right across industry players. So that is one. Secondly, in the pizza category itself, we have seen perhaps unprecedented competitive intensity, and you have seen one or two players doing uncalibrated expansion. And this happens in any consumer environment. I think it will all play out in the next 12 to 18 months' time because it's not easy to expand without a business model. And some people have, I think, expanded without a new store economic model. And the third part, which I don't want to give as an excuse, But if you look at our same store decline of 20% this quarter, year on year, last year, our same store sales growth was 23%, way above anyone else in the pizza category. So if you look at a 2-year CAGR perspective, we have still grown 1.5%, 2%, which will be in line with what the rest of the competition is. Undoubtedly, near-term headwinds on pizza, but we are focusing on 4 things. One is, how do we increase brand salience? And that is through innovation, and that is also through advertising. We've launched the large pizza in Gujarat and Kerala, good results there. How do we bolster dine-in experience? Pizza Hut is known for dine-in, and there's a lot of work that we are doing on dine-in. On home service, is all about partnering with our aggregator partners, Zomato and Swiggy. And really, we've invested in a kitchen preparation digital tool that helps us deliver hot and fresh pizzas. And finally, we're going to be a little more cautious in our restaurant expansion. So these are the 4 elements that we are focusing from a Pizza Hut perspective. I think if we get our act right, and as the economy starts to rebound, this brand will also recover.
Okay. So that's with regards to where Pizza Hut, KFC go. Now, taking the way the same-store sales growth is panning out, would you still maintain your guidance to double the store count over the next 3 to 4 years?
So this guidance is on a consolidated basis. When you look at KFC, Pizza Hut, and Sri Lanka, parts of the business might be at the upper end, parts of the business might be at the lower end. So from a KFC perspective, given that we are still able to maintain restaurant margins despite flat SSSGs, means that we will continue the pace of expansion. On Pizza Hut, undoubtedly, we will be cautious. So we've guided 3 to 4 years. Perhaps it will be at the 4-year end of the spectrum. In Sri Lanka, we have restarted this engine. And again, as we look at how the macros bounce back, perhaps it will be at the higher end of the 3 to 4 year spectrum. But the guidance still remains in this time frame, Hiral.
Okay. Now, coming to the Sri Lanka business, how has that been? Because in Sri Lankan currency, 8% growth, Indian terms, you've seen a 29% jump that has come in, 15.3% EBITDA margin, which is the highest, if I'm not mistaken, in the past 5 quarters as well. So going ahead, it seems that Sri Lanka will have a favorable base as well. What's the outlook on Sri Lanka? How much does it contribute now, and where do you see it scaling up to?
So last year, over the last 3-4 quarters, we had said that we expect the macroeconomic recovery to happen perhaps in calendar year 24. We are seeing green shoots of recovery already in this calendar year. And what do I mean by that? If I look at raw material inflation on a very high base, is today stable. There's no issue on Forex. Forex is stable. In fact, the Sri Lankan rupee appreciated versus the dollar. No issue on getting raw materials and so on. Tourism is starting to come back with a bang. So green shoots of recovery. There are other places where still inflation is high in utilities, etc. But this is starting to positively impact our business. I think the important point here to note is Pizza Hut is the #1 QSR brand in that country, perhaps the only place in the world where Pizza Hut is the #1 QSR brand. So it's powerful. We've got great execution, both home service as well as dine-in. Our teams are fantastic. The brand is so well known. We are most well penetrated there. So all the macros and the micros line up really well. As the economy continues to recover, I'm really bullish about Sri Lanka. We've kickstarted our restaurant growth itself. Last quarter, we opened 4 stores. So cautious, but the recovery is marginally ahead of what we had perhaps thought of even 2-3 quarters earlier.
Right. Another question just came up to me from an India perspective was that in India, on the back of the World Cup, we did hear of a lot of chains which went ahead and halved their large pizza prices, taking competition into consideration. What is it that Pizza Hut had to do? And if that is the situation where even you had to cut prices, seeing competition, will it impact margins of the third quarter?
So perhaps there were a lot of rumors that prices have been cut. I mean, competitively in the market, we didn't experience that. We've launched our large pizzas at an attractive price point. So, and we've launched it in 2 states, and the response there is quite encouraging. Overall, there hasn't been any price cuts that we've had to take. Pricing has been stable on the back of perhaps pricing that we took a year ago.
Got it. And clearly, from a growth perspective from here on, Sanjay, what is the outlook for FY24? And what's the next milestone you as a company are planning to actually wanting to achieve?
So I say to people, being in India in a consumer market means that business performance will follow a sinusoidal curve. So there will be ups and there'll be downs. As long as the overall longer term trajectory is in the upward direction, we should not worry about it. So the last perhaps 4-5 quarters have not seen the best of macros, but I'm quite confident about the potential of the country. So we continue to. So our internal targets are: can we grow same-store sales growth by about 5 to 7%, revenue by about 25%, and EBITDA by 30%. There'll be years when we will outpace this, and years when we will fall short of this. But the long-term trend, if it is similar, I think we all should be quite happy.
Absolutely. And I think consumption space is always something which is under the eyes, and not only from investment perspective, but even from a consumer perspective. Thank you, Sanjay, so much for joining us on the show. Always a pleasure to speak to you and, hear from you in terms of what are the trends looking like and have a candid chat. So that's the management of Sapphire Foods. Clearly, if you see from a stock price performance perspective, it's been a slightly volatile ride. And as Sanjay was mentioning, from last Diwali to now, the season has been muted. The consumption space has been muted. KFC is the one which has been having a major impact, but it's I beg your pardon, Pizza Hut is the one in India, but that's one of the biggest chains in Sri Lanka, which is working really well for them as well. Talking about, the recent news which did come in where majority of the chains had to halve their large pizza prices. Safire Foods said that they have not done anything on that front. So that's an interesting point to pick up. But today's session as well, if you see, stock is absolutely flat. In the last 5 days, 3.5% is the up move that we've seen on the counter. And in the last 1 year, again, a 9 to 10% is the kind of cuts that we've seen. So that's with regards to where Sapphire Foods go. And overall, if you see in terms of the strategy as well, they have been absolutely cautious with regards to expansion of new restaurants in the Pizza Hut space. Clearly, they are planning to grow their dine-in sales with regards to Pizza Hut. And they're strengthening their delivery with late night delivery channels. 12 to 15% restaurants are going under refurbishment, and they have a closure of around 3 to 5% of the long non-performing restaurants in the portfolio. So a process of re-engineering on the back end is what they've undertaken, and the capex continues on that front as well. Overall, they are very much confident in terms of where the growth opportunity in Sri Lanka goes. The restaurant EBITDA margins have been at 15.3% for Sri Lanka, which is the highest in the last 5 quarters. Moving on Thomas Cook, another one to watch out for. Interesting set of numbers coming in there. Revenues up 51%, profit versus a loss. Margins have seen a good improvement as well. To discuss more on the same, let's welcome in our guest. We have Madhavan Menon, Executive Chairman at Thomas Cook India. Madhavan, good morning and welcome to the show. And always a pleasure to speak to you and really speaking to you after a long time. First, and congratulations for the set of numbers that we've seen. What's worked?
Thank you for having me on the show. Yes, we did have a decent quarter. In fact, we've had a good H1 in terms of the results that we've announced. And this is obviously, if you look at the last 2 years, we were in a recovery mode, as was the tourism industry after the pandemic. I think we are now over the recovery mode and we are into a growth mode. On the back of trends that we're witnessing in the tourism industry.
Right. So, Madhavan, overall, if you have to see the various segments of business from travel services to Forex to hospitality to digital imaging solutions, where is the growth coming from and how do you see it moving ahead in the coming quarters?
So I think all our group entities, starting with Thomas Cook, SOTC, the digital imaging business, Sterling Holidays, are all firing on all cylinders. So, we're seeing the growth on the back of customer demand. Whether you look at Thomas Cook and SOTC across all our segments, we've had very good growth over the previous year in all our businesses like foreign exchange, leisure travel, corporate travel, as well as domestic travel and short-haul travel. And barring long-haul travel, which is on the holiday side, we've actually fully recovered if I compare it to the 2019 numbers. If you look at Sterling Holidays, they actually turned around in 2022, sorry. And they've been firing on all cylinders every quarter since then. If you look at the digital imaging business, despite the fact that the Middle East, where nearly 50% of their business is concentrated, it actually had a good quarter on the back of demand in China, as well as in Southeast Asia. So, I think in general, we've seen the recovery and there is demand that continues to sustain. And I don't think this is a flash in the pan. It is sustained demand that we're going to witness over a period of time. Look at domestic travel. In India, we're seeing sustained demand. Earlier, we would see demand up to possibly the Durga Puja and the Diwali period. But now we're seeing, if you look at our forward bookings over the next quarter, we're up 32% from a year ago. And last year, Diwali, we did witness incremental demand. Another point I want to make is that as a result of the pandemic, we did a lot of cost re-engineering in the group. If you take Thomas Cook and SOTC, we integrated the back end completely. If you look at some of the other units, during the pandemic, we went down to 50% of our costs. Today, we are at about 70% of our 2019 costs. And we hope to sustain these cost savings over the next couple of years, allowing them to drop to the bottom line. Look at our EBITDA margins. If you look at the group consolidated EBITDA margin, it's at 5.4 for the quarter. It's been 5.7 for the year. So, I'm fairly comfortable that the margins are stable at this point and we will be able to sustain the demand.
Right. With this, how has the World Cup and the festival season been so far? And the ticket size for corporate travel is also up almost 24% year on year, right? So the travel and service portfolio within that, which subsegments are the most accretive according to you?
So if you look at corporate travel, it led the recovery starting sometime at the end of 2021. And it's at 130% in terms of volume terms as compared to 2019. This has been on the demand from corporates to travel because, after a 2-year period of not traveling at all, I think there was demand. But what we're actually seeing is that demand has sustained, and we're not even witnessing a lot of the long-haul demand because visas continue to be a constraint, whether it is corporate or leisure. So corporate travel has seen increased demand. if you look at the MICE, the incentive business, it has really done very well. It's recovered significantly, and it's been assisted by government business. For example, the G20. Thomas Cook did more than a third of all the pre-G20 meetings. We are managing. We managed 2 Kalo Indias this year, as well as the national games, which is right now going on in Goa. So, we're seeing new segments of business come to us. Some of it may be one-off. The G20 is one-off, but corporate demand has also grown significantly in the incentive space. So we are seeing a lot of demand from corporates, and that doesn't seem to be abating at all.
Okay. And if you talk about the overseas travel business, that has seen a good turnaround. Is this sustainable, and what's the outlook going ahead?
So if I break up the overseas travel into 2 parts, one is short haul holidays and the other one is long haul holidays. If you look at short haul holidays, they're at about 70% of what they were pre-COVID. If I look at long haul, they're only 56% of what they were pre-COVID. Now, the reason for this is that while on the short haul, we've seen an easing of visas, on the long haul, visas continue to be a problem, and we expect that by about the end of the last quarter of calendar 23-24, we will see that issue resolved. So you've seen upside because input prices have grown, but we expect that there will be further upside as visa issuance becomes easier and easier. You will appreciate that the Schengen countries have now said that they will accept an application 6 months before travel. That actually allows us to drive our processing much quicker than we did earlier. Secondly, yesterday's announcement by the US Embassy that they're going to open up, visa processing in India, speed up visa processing in India, though we are yet to see the complete evidence of that. My expectation is that in 2024, you will see a full-blown return to long-haul travel, which is Europe and the United States. On the short haul, it's just going to continue. It's become a 12-month business. It's no longer seasonal. So, I think there have been a variety of changes that we are witnessing in the trends. Another trend we witness is that the average age of our travelers has dropped by nearly 8 years. So it's a younger generation that's coming in and actually driving travel now.
Right. So that's what it looks like from here on. But what is the strategy for growth going to look like for you, specifically if you talk about even the Forex segment, right? Because we have the recent launch of the Rupee Forex cards that have come in, and it's seeing a strong EBITDA number that have been posted by the Forex segment for you as well. How are you planning to increase the adoption and spends in this category?
So, the Rupee card is early days. It is only transactable in the UAE, specifically Dubai. If you look at just prepaid cards, we are, for the second quarter running, we are the largest distributors of prepaid cards in the country. We compete directly with the banks, and we've exceeded their distribution numbers. If I just look at one quarter, we issued about 74,000 cards, and we are averaging card loads of approximately 100 million every month. So this is part of the growth, and that's driven by corporates, it's driven by students, it's driven by overseas travelers, it's driven by other remittances. So, we've seen a sustained growth in the foreign exchange business, and you'll appreciate just the foreign exchange business by itself is our largest business across the group. I mean, there is nothing that is bigger than the foreign exchange business. So my expectation is that this demand, be it from students, be it from corporates, will continue. This is not going to change. We've seen this where growth, even pre-COVID, that's just continuing.
Absolutely. And I think a lot of levers that are in place for the travel tourism industry and all the ancillaries around it as well, with everything opening up. Thank you, Madhavan, so much for joining us on the show. Completely running out of time, but an interesting conversation, and hoping to speak to you soon again to get more highlights in terms of what the industry has in store from here on. If you see in terms of the stock price as well, clearly with regards to where Thomas Cook is concerned, if you see the share price right now in terms of today's session itself, the stock is trading with gains of almost 1%. In the last 5 days, a 14% up move is what we've seen, and the stock is nearly doubled on a YTD basis, more than doubled on a 6-monthly basis. So that's the management of Thomas Cook. Completely running out of time. That's all that we have in this session. Thanks for watching BK Prime.